I'm going to find out how to make the next 3.
Good Lord. God, I didn't realize the timer was going to be so obnoxious. But hey, I'm going to dive right into it because I know that some people have been waiting very patiently for me to get back to running some of these. I'm going to orient ourselves a little bit of where we've been. Of course, this is Whale School by Crypto School, which is owned by Crypto Banter. And Kyle Doops is the man that you see on the screen right now, paused. And he is still leaving this stuff here, getting some stuff situated. And he is running a course, and there's going to be a live event here on September 1st, I believe, that I'm going to be trying to jump up onto, and I'm going to encourage everyone in our community to jump into. Our main goal is to become profitable traders so that Kanye West cannot steal all of our money, and that's what we're going to do. So we're going to make it happen one way or another. Can you hear me now? Halama. Can you hear me now? And we'll probably do a giveaway on this stream one time because there's like no one that joins. So you'll basically be like printing money because if you're one of the 7 people that show up to become a better trader, you're going to win some money. Okay, all that being said, this is course number 2. We're still in, or sorry, this is episode number 2. We are still in risk management. I was going to skip this section because it's talking about internet security. And I think that many people, would maybe say that that's not something that they necessarily need as much of. However, I think that after talking to a few other folks, it might actually be something that people want to know about. So I'm just adjusting the screen here just a touch. Make sure that everything's all situated, and I'm going to let the video run. While I do that, we're talking internet security. This is the risk management portion, and of course, internet security is part of the risk management portion.
This is the part of the course I've been waiting for. This is where we're going to get into the strategies and have a look at the charts, and I'm going to find out how to make the next 300x game. Well, I hate to break it to you, but this is the last final important point for risk management. I know how you guys feel. I understand. I've been there. You just want to get straight to the racetrack. But remember, it's like a racing car driver. You got to warm up the tires first. You got to put on your seatbelt and your helmet. And before we move into the next part, this is your final safety checkpoint. And we have to talk about online security. We've covered the hardware sector and how to protect your funds using cold storage wallets. But now we need to talk about the other side of the business, which is where you're going to be spending a lot of your time. And that's online, on exchanges, interacting with DeFi platforms, and revealing your IP address. Now, why is this important?
Hold on, I'm dropping some frames here. I don't know why it's getting so laggy. I'm
And
adjusting
why
the
should
screen
you
size,
take
but
precautionary
that's how we're
measures?
chilling here.
Well, when your IP address is shown, it's almost like you're walking around exposed and naked. I'm sure you prefer to do that with clothes on, wouldn't you? Exactly. And that's why you have to have...
Okay, sorry guys. I know that we're getting things a little bit situated here, but you got to give Kyle, man. Kyle's got this humor that I think that goes a little bit underappreciated. I think he said that you wouldn't want to be walking around naked. Kyle, have you met the degens out there? I don't know if Kyle spent as much time as I have in the trenches, because there's a lot of folks out there, I think, that would prefer actually when they have the opportunity to rip those clothes off. Man, they're out there.
And why should you take precautionary measures? Well, when your IP address is shown, it's almost like you're walking around exposed and naked.
Like, I know many degens who are out there in the trenches that like prefer this. This guy for sure. Like, I could tell you this guy's portfolio right now. This guy is 100% in Giga. Like, look at him. I can tell your portfolio. I'm like the GPT, the AI, where if you told me your portfolio, I could tell you what you look like. I could tell you your weight, your height, your hobbies, your interests. Are you single? Are you straight? Like, I could tell you literally everything about yourself. Got to have that secure IP. Dubsky, not wrong. Dubsky, is this you? This could be you, Dubsky. Dubsky, what is in your port? I will tell you. I will tell you exactly what you are, Dub, if you give me a heads up, man.
I'm sure you prefer to do that with clothes on, wouldn't you? Exactly. And that's why you have to have something that masks that IP address. Hackers look for your IP address, and if they can find your IP address, you have a vulnerability, and it means they can exploit that vulnerability and siphon out all your funds or hack you, right?
All right. I like the course so far. I'm going to skip a little bit because I think that this is going to be a VPN, a NordVPN thing, which, yeah, if you're using a VPN, you're much more secure. You should be using a VPN. And sometimes you have to use a VPN, by the way. If you are a degenerate gambler and like to gamble even more, you can get on Polymarket if you have a VPN. There's some sites that you can trade on only if you use VPN, if you're in certain countries, states, etc. So a VPN is kind of mandatory.
That's where they bring in
for a lot of
malware
reasons.
and virus. Well, simply you have your address provided by NordVPN. All right, so currently, according to my VPN, I'm situated in Argentina. But now, if you're a really paranoid person, you can go a step further. This gives you...
Hey, you know what's funny? I know I'm stopping this a lot, but we're kind of letting the room fill up a little bit. Did anyone else do the Argentina hack where you got YouTube Premium for essentially free? If you used your VPN and you put it in Argentina, the price of YouTube Premium, so you can get rid of all those ads. If you don't use Brave, again, I use Brave, but you know, if you just wanted to, the price of YouTube Premium in Argentina was like nothing, basically. It was like $1. So I was paying $1 a month to get YouTube Premium in Argentina, and then they started cracking down on that. And then I moved to Turkey with my IP. That worked pretty well for a while, and then they cracked completely down on it, and now I just use Brave like everybody else.
Additional protection, which makes it even harder. That have to break.
I'm moving around here,
hacks, but also to protect myself in the long term, because
gotta
you don't
protect
know what
yourself.
sort of things
That's
will
right.
come up in the future. And other details to relevant authorities.
Telegram will now users' IP addresses, phone numbers, and other details to relevant authorities.
In response
Telegram
to
caved, dude.
Request, which means if Telegram gets subpoenaed, your information is no longer protected. Telegram has oftentimes been a place for crypto natives where people go to discuss.
No, the Argentina VPN stuff died because now they're forcing you to have a. Well, actually, let me rephrase. If you have a credit card that has a Argentina address on it, then it will, like, your billing method has to have that region code on it. So I just use Brave now because it blocks all the ads, but there's like some features and it's a little bit more glitchy. So if you're able to get a payment method with the region, the country that you're buying it in for YouTube Premium, then it works. Turkey was working most recently.
Projects and pretty.
Look it up. Look it up on Reddit. Those guys solve everything, dude. They're insane.
IP address secured with a VPN, and that will not per day, but per month. All right, guys, so that's it. That's all your information.
All right, so that's how we're gonna stay safe. NordVPN. There you go, Kyle. Thanks for letting us know, Kyle, with the great analogy. Don't be walking around out there naked, guys. You will get scooped up by the authorities. Next video here. Let's get to some trading. We're warmed up. We're ready to go. I'm ready.
Most of us have at some point in time lost something very, very important to us. And I'm sure you can all resonate with that.
What was this course called? Hold on. Well, like I wanted to see what this section was called. I didn't see it.
Feeling of where you lose your mobile device. And you have to go
securing your crypto assets with Ledger. Okay, we're still on the like the hardware. So we'll just talk through this a little bit too.
The data, the photos, the content.
I'm gonna mute it though as it goes. I'll give you guys a little bit of an idea of how I handle my my seed phrases and things like that. I'm a psycho. I am a psycho. You do not have to be me, but I write them all down in various notebooks that have some level of redundancy, and they are strewn about the house. I'm sure that there are many other better, more efficient ways, but I like looking crazy because if and when I get hit by a bus and they come and search my home, it'll be amazing because they're going to be like seeing all these clues. They're going to be seeing like pieces of paper falling out of the curtains. They're going to be opening notebooks and they're not going to know it. This brings up a good point. I see Kyle's talking in the background. He's still just talking about Ledger. I do have multiple ledgers. Ledger's a great one. Trezor's a great one. I know a lot of people like Tangem. There's a lot of great hardware tools that you can use to keep your crypto safe. But one of the things that actually I probably should do, like if I get hit by a bus tomorrow, I don't think my girlfriend would know how to access any of my crypto. Like she might think we're poor. So I should probably tell someone how to do that. It's not like a living will or whatever, but you know how it goes, right? Do you guys have that? Like if you guys just disappeared, you know, for God forbid, we don't want you to disappear. But if you did, if you somehow for some reason disappeared, would your family be able to access your millions of dollars that we're all gonna have at the end of the cycle here? I'm putting a share link. Get this thing shared out so that you can copy the link. Here, get in there. Get in there, boys and girls. Live. We are live. All right. I know that I'm not listening to this as much as maybe we should, but we're just talking. We're telling some stories. We're letting it warm up. I mean, they're just talking about Ledger. We all know about Ledger. We'll see what he's saying. Oh, speaking of, I feel like my internet's
and it's absolutely incredible.
We back.
So if you want to take your trading and invest.
All right, Halama says his brother would be able to, and that's actually
investing to the high. That's
actually a smart thing, dude. You got to have someone, you know what I mean? Just like someone out there that would be able to identify it and get the money to the right people, right? You want your mom, like again, no one wants that. Okay, the internet is like absolutely glitched. You want your mom to be able to like get access to your money and stuff like that. So if it's your brother or whoever knows how to access it, that's a good strategy. That's a good way to do it. Hold on, I'm killing some different background things. Maybe that's what's causing us all the issues here. But Halama, that's a good point. It's going quality 1080p. There's no lower quality. That's it. I think that they're miscalculating how this should be. Okay, so crypto can be kept safe. We're going to skip around here a little bit. I want to get to the trading. I know he said you got to warm up before you get on that race track. But that life isn't for me, man. I want to get there. Yeah, I know my mom doesn't either. If my parents would think I'm broke, dude, they would be like opening the bank account and they'd say I have no cash and they'd be like, "Wait, what?" They think I was a drug dealer probably. And a psycho. Because I have seed phrases written on papers all around the house. Do you know how crazy you'll look if it's just seed phrase after seed phrase? All right, we've got the point here on this. We're gonna move past this here, guys. We're getting to the trading. I think we have a quiz actually. Good luck in the next video. All right, here we go. I think this one's a quiz. Should we cheat? Should we take it together? Oh my God. Okay, we gotta like zoom in on this a little bit. But guys, I think we're gonna fail. Is that bad? Is this bad if we fail? I mean, it can't be good, right? Okay, hold on. Over here. Okay. Here we go. Here's our test that we're taking together. I'm gonna blame you guys if we can't get these if we can't get these right. What is strike rate trading? There's a star. What does that mean? A, the speed at which trades are executed, the percentage of losses in a trading account, percentage of winning trades out of all trades taken, the rate at which stocks are bought. We did this a week and a half ago, 2 weeks ago. We should know this. Strike rate trading, the speed at which trades are executed, the percentage of losses in a trading account, percentage of winning trades out of all trades taken, or the rate at which stocks are bought. Guys, I have my thoughts. I have my guess. I hope my guess is correct. I'm thinking, and I don't really remember. I don't really remember this term, actually. But I think that it's the percentage of winning trades out of all trades taken. And Halama is locked in, man, because that's what he said, too. So, Halama, we're holding hands. We're doing it together. Here we go. We got to... Halama, we're gonna do a giveaway here one of these days. Not today because I didn't plan it out, but we'll do a giveaway. And when people get them correct, dude, you'll just like win. You should earn. You learn, you earn. Here we go. All right, here we go. This one. Is it true that a higher strike rate always means more profitability? What up, Priest? How's it going? And Halama, for sure. I'm telling you, next one we'll do a giveaway. Why not? What should we give away? How many questions are there? Should we do like $25 a question? And if like you're the only person in here making it happen, why not? I don't care. My goal is to give away. I have projects approach and ask, oh, can you do this first? Can you do this? You know what I'm going to start doing? I usually turn them away. I'm going to start taking the deals and just giving it to you guys. I honestly do not care. I don't. Let's make it happen. Higher strike rate always means more profitability. No, it does not, because strike rate is the amount of times that you win. But you also need to factor in the size of those wins. If you win one time out of 100, it's a low strike rate. But if that one time gets you a lot of money, you are cooking. I wish I had an answer, like an explanation here. You know what I mean? Like, it is not true. That's good. But like, I just, I gave you guys the explanation as to why. I wish that they had an explanation here. Maybe I'll chat the crypto banter folks and let them know. That would be kind of cool if they did that. You know what I mean? Oh, yeah, we'll do this. Priest, BitGenie, Dubsky, and Halama. I think I have a Mambo. I have a Mambo giveaway going right now. I don't know if you guys are in it, but if you are, I swear to you. Here, hold on. I got to send a reminder to myself. Are you guys in the Telegram? I got to make sure. Maybe I'll just give it to one of you guys. Why not? 250. Maybe we'll split it between two of you guys, because I think you guys, you guys would not mind. You guys would not mind sharing. Sharing is caring. Okay. Let me. No, I can't. Okay, I can't say that just yet because it has to be randomized. So of course it's gonna go random. But I see you guys out there. Hold on, I'm gonna take a note. I'm gonna go here. I'm gonna chat. I'm just chatting myself a reminder here in the banana zone. We got Dubsky, Priest, Alema, and who's the other one? BitGenie, right? BitGenie. How do you spell that? BitGenie. BitGenie. There we go. Bank. Okay, I just put that. No one's gonna know what that means, but we will. I don't even care if they know what it means or not. Priest, Dubsky, Halama, and BitGenie. Yeah, okay, we'll figure it out. Boom. There we go. Okay. Don't tell anyone. Don't tell anyone. And don't let me forget either. All right, here we go. Continuing on with our course, the drawdown death trap refers to the danger of not diversifying one's portfolio, losing a significant portion of one's trading account after a series of losses, using too much leverage in trading, making too many trades in a short period of time. The drawdown death trap. We know that one. That one, I never knew there was like a term for it, but it's essentially when you lose a percentage of your portfolio, in order to gain that percentage back, it is a much bigger number. I think that if you lose 50% of your port, you have to have a 66% increase in the same asset to make all your money back. So I believe that that's what it is. Boom. refers to the danger of losing a significant portion, and we just obviously explained why that is and why that might be. Here we go. Continue. The Kelly criterion. Okay, I have absolutely 0% of an idea of what that is. What the hell is the Kelly criterion? B. Priest, you're saying B. Is that for this one? Is that for the Kelly criterion? Or is that for the last one? I might be on a bit of a delay because the internet is like maybe 10 seconds, I think. The Kelly criterion is a formula that is used to determine the optimal size of a series of bets, the safest stocks to invest in, the highest possible return on investment, the best time. I'm going to say this is my gut here. It's A. That's my gut, but I don't remember what the heck the Kelly criterion. Previous one. Okay. Do you know Kelly criterion? Kelly criterion. The optimal size of the bets, no? Is that right? The first time we did this in the first part of the course. And this is how learning goes, though. You know what I mean? Like, I think the concept, like I remember concepts over names. I think that the concept it's referring to is, do you remember what was the, it was Better Trader, right? You guys remember that site? Better Trader. Can I open this? Will this nuke everything? I'm like, here, it's going to do this. Put in a new tab. There we go. Do you guys remember this website that Kyle was talking about? It's where you can like put in your position size and it'll tell you how much you should be like investing and what your stop loss and stuff like that should be. I think that was what the Kelly criterion was. But we got some A's. Hey, the miracle of aggregation. There we go. Guys, we're going to graduate a valedictorian from the Whale School. Summa cum laude. Or magna cum. Which one's better? I forget. It's one of those. I was one of those. I forget which one. But here we go. It's recommended to risk more than 5% of your trading account on each trade. Yeah, we're degens, guys. We go all in. We go all in. Dr. Akul, I see you here hanging out too. I need to put your name on the list. But hold on. I got to open it back up into the Soka Signals chat. People are not gonna be happy if they think this thing is rigged, but I don't really care. Dr. Akul. Okay, but you're at Colin. Oh no, okay, never mind. Oh, I won't say anything. Oh no, you're saying no because I'm messing around. Yeah, I know. I know they don't want us to do 5%. I know. We gotta be good. We gotta be mucho good, boys. Dr. Akul. There you go. Everyone else can ignore this chat. Everyone else can ignore. You guys will know what it's about, though. For sure. Oh, what the heck? We can't even see what the question is. Sizing was wrong. Squeeze this down a little bit here. I swear, I don't know how like people when they're streaming, they size their windows correctly. I feel like my windows are always missized. I don't know why it is. Post Telegram. It's going crazy. Sonia, how you doing? Hopefully you're doing great. We're taking a test. We're acing it right now. We're 100% 5 questions in. Number 6, what's the main purpose of the Edge Sheet trading software? I kind of remember this. I think that he put it into an Excel sheet too. To predict the future of stocks, to automate trading decisions, to aggregate and analyze a trader's historical trading data, or to provide real-time stock market news. Oh, they just refresh the page, and that's how they do it? I am on PC right now, yeah. Refreshing the page, how it gets done. Okay, that's how they resize these things. I'll have to look into that. I think that this one is aggregating and analyzing. Is that right? Is this C? I don't want to lose it. We're 100% right now. We need to know. I guess that next time when we do a course, we need to like finish the course and then take the test so that we're not like harkening back 2 weeks to try to figure it out. But I do see some C's and I think that that's probably a C. Boom. We are correct again, guys. Summa cum laude. I'm telling you. Position sizing in trading helps determine the duration of the trade, the best stocks to buy, how much of one's account should be risked. Okay, come on. We know this is like I don't know if you guys ever took a test where it's like a automated test, you know what I mean? Where it's on a computer, and based on your answers, like the harder that it is, the harder that your answers are, or sorry, the better you're doing, the harder the questions get. And the worse you're doing, the worse that you're doing, the easier the questions get. And and I don't know if you guys have ever taken one of those tests, but sometimes I have before. And you're taking the test, and all of a sudden the question gets like so easy. It's like, what's your name? And you're like, oh my God, dude, I must be doing miserable on this test. You know, you're taking a test, and all of a sudden it's like, is this a picture of a zebra, a giraffe, a lion? And you just know you're absolutely failing. Halama, I believe you are correct, my friend. Of course, we're going C there. Position sizing, submit. Is that it? Did we do it? Our next lesson will start shortly. You guys, we got to give ourselves a round of applause because we crushed it. We crushed it. We did it. That was us. And I think we're going to be getting into our first charts. Yeah, you know what I mean. The difficulty levels increase with how you perform. Yeah, dude, it's always scary. When the questions, you want easy questions, but then when the questions get too easy,
you know what I mean? Will occur in an area of support or resistance. Now, when you look at a chart of support.
All right, are we sized correctly? I think we are. All right. Guys, congratulations. We did it. I think we went 8 for 8. That's 100%. We're going to give all of ourselves gold stars. And maybe some mambo jumbo here on Friday when the giveaway is announced. I think that I have a sneaking suspicion. I know some of the people who'll be sharing the wealth there. All right, we are going to watch this one here. We're going to talk support and resistance lines. I'm going to try to let the course run a little bit because I think that this stuff will be a little bit more informative than whoever that naked guy walking down the street was with NordVPN. So we'll watch this and we'll see if we can make it all the way through to another test. Because now I feel good. Yeah, gold medal right there, Priest.
Auto resistance area is an area on a chart where price action stops or reverses or stalls in price action, meaning momentum.
I know I said I was going to let it run, but have you guys seen those charts that people draw when like they actually have no idea what they're doing? And it's just degens where they take a screenshot with their phone and they draw an arrow that just kind of squiggles and then it goes way up to the right. I so badly want. I'm going to go find one of those while we're watching this.
Down. Not all support and resistance levels are built the same. Some are stronger than others and elicit much greater moves. Support or resistance levels can be strong horizontal zones on a chart. It could be diagonals on a chart, or it could be moving averages or exponential moving averages. Knowing the difference between all of these support and resistance levels is super important when it comes to your trading because it sets the stage for where your trades will take place. So identifying which levels are stronger than others will increase the probability of your trade and success, which means that when you take those trades, you'll know when to bet more and when you should be betting less. In this lesson, I'll show you 3 different ways that you can use to identify major levels of support or resistance on the chart, and also to identify how the probabilities of success differ between which one you use. So in the next video, I'm going to show you the first way, which is going to be horizontal levels of support and resistance. Get ready and I'll see you there.
All right, cool. So this is where we're actually getting some like rubber meets the road, meat and potatoes. This will be the foundation of your trading. Like these support and resistance is, tried and true. So these are like going to give you the guardrails for your trades, and they're going to be the impetus of like, when something's like either going up or going down and people are like, okay, when should I sell? When should I buy? Is it falling? Is it leveling out? These are meant to help you understand where that might be. And I am looking for some of those squiggly lines that these amazing people draw on their charts. But I feel like the people who draw on the charts have they've slowed down. Let's put it that way. I think that they're aware what's going on here. Sorry, that was my alarm. Okay, we're gonna keep going here. I'm gonna see the horizontal resistance lines.
When I first started trading, I was taught to look at diagonal levels of support and resistance when looking for the trades. And I'm sure many of you have come across this before. It's typically how most of us start out because it's just one of the easiest ways to recognize the trend. So basically, when price breaks out of a downtrend, well, then ultimately you were taught, well, that's where you're buying. But it was only later on in my trading career that I started to realize that not all of these support and resistance levels are quite built the same. And it was the horizontal levels which held the most weight and elicited the highest probability trade setups, which means these are the most important levels that you want to focus on when it comes to your trading career. And that's exactly what we're going to cover in this video. So if you have a look at the slide over here, this is what you would call a horizontal.
That's interesting because I don't see very many people drawing up these horizontal lines of support and resistance when you're out there in the trading world. He's right. You do see more of the resistance lines that are kind of showing price action,
level of support and resistance.
And
Very simply put, it's just a straight line directly to the side. It's not upsloping, it's not downsloping, it's 100% horizontal. So if you look over here at this support level, you'll see price comes down. Usually the first touch elicits the biggest and greatest move in the opposite direction. That is your first touch point. Then it comes down once again. You now have a second touch point.
Guys, we're going to make so much money. Like, think about it. How many people actually trade and how many people just say, oh, Kanye West launched a coin, I'm aping in. Hey, you could do that. You can get lucky. I've gotten lucky. You've gotten lucky. I've got rinsed. You've gotten rinsed. But if you actually have some like strategy behind it that is supported by real ability to read a chart, and I'm not talking about the 1 second chart for a project that has $8,000 in volume. I'm talking about real big boys, Bitcoin, ETH, the USDT chart, Bitcoin dominance chart. That's what matters.
Resulting in a bit of a smaller move, and ultimately it bounces again, eventually failing. Remember that. That's very important. The more times that a horizontal or any support or resistance level for that matter gets hit, the higher the probability is that it will eventually break. There's
And shout out to Dr. Akul. He said, he's hey, been there, done that for a while, and I'm moved on to a different way of looking at charts. That is the alpha. Dr. Akul, thank you for sharing that, because that is the alpha for the people who like are tired of being in the trenches and getting absolutely obliterated. There's another way. And by the way, you could do it all. We can still go to the trenches, take our knives out and fight. And we're just arming ourselves with more information here. And it's not like that complicated. You're telling me you guys, you can't draw this line? Everyone could draw this line, dude. Everyone could draw this line and see the bounces. That is not that hard.
Again, eventually that can reinforce the strength of a level, and that's time. Meaning if it takes a long period of time before price comes into that zone again, then
Amen.
that level can re-strengthen. It gets stronger over time. So here it is. It breaks. You have a breakdown. Price comes back, retests that level, and then probably continues the downtrend. But nevertheless, there are trades to take in between here before it actually breaks. Same thing is true on the resistance side. Big move up, strong rejection, another move up, rejection, another move up, less of a rejection, and then eventually there's a breakout. Now that you understand the very basics about the horizontal support and resistance levels, let's look at a real life chart, and I'll show you how you can identify those zones.
But before we get into this, do you guys actually know, because this is something that I asked 100% need an open mind, the people who make it and survive in this space are the ones that are willing to hear other points of view and be wrong. Like, you have no idea how many people I talk to who say they're never wrong in this space. That's not good. If you're never wrong, that's not good. Because first of all, it's not possible. But second of all, if you're never wrong, it probably means you're not pushing your edge hard enough. You should be wrong. We already covered this in the first video. Your win rate should be 60, 70, 80%. If you can do that, you're going to print millions. What do you need? What do you need it to be 100%? Who cares if you get 100%? Exactly, Halama. You cannot always be if someone tells you I'm always right, like you're not going to, it loses credibility. If you go to your doctor and they're telling you I'm always right, you don't need a second opinion. I've never been wrong in my life. You're getting that second opinion 100%. And Priest, yeah. Hey, trust me, I'm wrong. I'm wrong all the time. But like Dr. Cool said, man, if you can admit that, that is where like the real alpha comes from. Yeah, 60 to 70%. Are you kidding me? Guys, we're going to print. The thing I wanted to say quickly on these charts is understanding what they're actually showing. It's not just like random lines. This is something that, especially when I talk to people who are really deep into TA, they sometimes fail to understand. The charts, it's like a collective psychology of the market as it pertains to an asset. What I mean by that is these lines, these green candles and red candles, they tell you and me how people feel about an asset. It's not just like random, oh, okay, there's some red line, so it goes down, or it's some green line, so it goes up, or whatever. Green candles and red candles. It's telling you everyone who is trading and trying to find an equilibrium believes that this is going to happen to this coin. And they tell you with their buys and sells. They don't tell you by going to the timeline on Twitter saying, hold to $1 billion, Kanye West. That's not a thing. I mean, it is a thing, but it's not a thing, right? They tell you with the buys and sells that equilibrium is found. So when it breaks out of a resistance, if there's a resistance at $100, it means that the people who are buying and selling do not believe the asset is worth more than $100. But once it breaks out, now all of a sudden you have confirmation that it is worth more than $100. That's all that these charts are doing. So like, we don't need to overcomplicate trading. This is giving us the psychology of a market. The stock market, index funds, that is just the overall psychology. Dr. Cool says they tell a story and it's read down to you and your experience to read the right message. Beautifully said. I think Dr. Cool, he's on course number whatever. He's already a profitable top 1% trader, because that's beautifully said. I just said it for like 2 minutes and he summed it up in one sentence. That's how you know when someone has an actual understanding of the course material, they can take it and condense it down so everyone can understand it. Dr. Cool, shout out to you, man.
So if we take a look at this chart over here, you can see taking from the price action over here, you want to look at the touch points. And it's very simple. It's like connecting the dots, those old kids games where they play those with the coloring in books and they connect dot to dot to dot and eventually you get a picture. It's almost the same thing with charting. You're looking for the major stop and reversal points, the pivotal levels. Again, a pivotal level is simply a sticky point on a chart where price moves up, fails to get through a level, and then it reverses or it moves down, fails to break that level, and then bounces. You want to mark a dot off on that level, and then you're going to try and connect.
Shout out to Kyle, by the way, man. Look at this hair. He's got like perfectly floating that way. How does he do that?
The dots. So here it is. This is your first touch point. Here's touch point 1. Here's your second touch point coming in over there. Price rejects slightly, and then eventually it breaks through. As you can see, comes down, your next major pivotal point. You need 2 or more touch points in order to create a trend line, right? So here you had 1, here you had the next daily open, it came down, that's already 2. Here you had 3, so already you could put this trend line in place. Goes up, reacts off that big push towards the upside, slight rejection, next candle pushes through, holds onto this level, eventually breaks down, and then now you know this is going to be a strong level of resistance in the future, and ultimately the range is formed where price comes down. Retest this. Look at all the time that's passed over here. Remember I said it reinforces over time. So this level would have become strong again despite being touched now for the second time. So it elicits a big bounce all the way to the top side. So let's have a look at this chart of Bitcoin. This is a high time frame chart. It's a weekly chart from 2017. Here's your 2017 top. Here is the 2021 double top that we had. It's important for you to understand that another thing that affects the strength of a certain level of support or resistance is the time frame. The higher the time frame, the stronger that level is going to be. So a monthly is going to be much stronger than a weekly is stronger than a daily, and a daily is stronger than a 4-hour time frame. So
wait, I want to hear that part again, because I think that's important, because that's something that I see often people talk about, where it's like, oh, look at the chart at the 4-hour level, at the daily, at the weekly, at the monthly. And I always ask, hey, how do you choose which one you want? And very often in crypto Twitter, they just choose whichever one is telling the story that they want. But as Dr. Cool pointed out already, you got to have an open mind. You have to be able to sit there and say, like, challenge the point of view. I don't want to just find the chart that convinces me of what I want to have happen. I want it to tell me what's actually going to happen. You know what I mean?
Look at the thing that affects the strength.
So like if I could find one chart that tells me that it's going to billions, but it's not, that's useless. I want to have very objective information So this is what he says. He says the time, the longer the time horizon, the stronger
of a certain level of
effect.
support or resistance is the time frame. The higher the time frame, the stronger that level is going to be. So a monthly is going to be much stronger than a weekly is stronger than a daily, and a daily is stronger than a 4-hour time frame. So if you look at the price action over here, you can see you said in the top in 2017, price then came down, fell underneath that, rejection, eventually breaks through all of that. And look at this part of the cycle, how important that 2017 top has been. So prior levels that were sticky in the past can become important levels in the future. And that's what you need to know about mapping out your horizontals. Another very important thing to consider when it comes to marking out these
That's wild. So he's bringing in previous cycle tops there.
levels is when an area of support is lost and price pushes back up into that level, it may be confirming it as resistance. That is called an SR flip. In trading, if you see the word an SR flip, it stands for support resistance flip, or resistance into a support flip. So when it comes to trading, you always need to ask yourself, did I just gain a level or lose a level? So if you gained a level, well, now it's flipped into support, and then you should be looking for upward price action. If you lost a level, it means that level has been flipped into resistance, and then you should be looking for lower prices over time. And
I feel like we should be taking notes. I'm gonna need you guys here for the next test, because we might have to do it straight through, because there's a lot here.
Important consideration is the closing candles. The closing candles have a much higher weighting or importance when it comes to marking out these zones. In other words, a body close on a candle is more important than marking out from wick to wick. Some of you may be looking at this chart and wondering, why have I not marked out certain levels which you are already recognizing as important? For example, this bottom level over here, you could see if you took a trend line and you ran it across over here, it would most likely meet those major pivotal points. That would bring the price just under $4,000. And the answer is very simple. The reason that I haven't marked that level off yet is because price is nowhere near that zone. If price had to come down and start to lose key levels, remember, did you gain a level or lose a level? If it loses a level and it starts to come and approach towards that zone, well, then I'll probably mark that level off on a chart. But until then, it's just not relevant. The final thing you need to consider when marking out these major horizontal levels of support or resistance is it a wick or a body of a candle? So the body closes of a candle hold a much higher importance or weighting than what the wick does. So if you look at this chart, he has a prime.
Yeah, you know how I know about that? Because ya boy owns quite a bit of Mumu, and when Mumu wicked to $200 some odd million because someone rotated like $1.5 million of, I want to say that it was WIF into Mumu, and just when it made it go way up, it wicked for about half a second up at all-time highs. I think it was like 600 million or something crazy like that. And obviously we know those wicks don't mean that much because it came back down to 200 million. And then there's a long story, which I cannot share live on the broadcast. Maybe I'll do it in the Telegram, as to why our good friend, poor Mumu, is down in the dumps right now. But hopefully it'll have a comeback. I've held it and I continue to hold it. So again, I hope that it comes back.
Example, you can see over here, body closes, wick comes down, body closes. Now we've marked the level off in line with the rest of the body closes. The candle closes over here. You have a candle close, candle open, candle close, candle open, but the wicks above were not considered because closing candles signify the true psychology of the market and whether the bulls or the bears won in that particular case. Now that you understand horizontals and how to map out those levels, make sure that you go ahead and practice that. Look at any chart, something.
Oh yeah, we know about those horizontal levels now. I wanted to read for Dr. Cool here. He said, before entering a trade, I always try to zoom out, meaning I need to understand the bigger picture, usually given by daily, weekly, or even monthly charts. And I might even avoid entering a trade and just wait for a better time to trade. So there's a lot of alpha in that as well. Kyle's just kind of closing out this video and going into the next one, which we're going to watch the next one right now anyway. So there's a lot of alpha in that, but I'd say the two big things are, number one, he has a plan, right? And
the power of moving averages and exponential moving averages is not.
We're going to pause that for a second because I want to finish this thought. having a plan is better than no plan at all. I try to tell people this when they're entering a trade, even in memes, and they're just like, "Oh, I'm in it because this person said to do something about it." I'm like, "Well, that's great, but do you have any plan at all?" And even a plan of like, "I'm going to 2x my money and get it all out." That's a plan. Perfect. I'm going to get a 20% and get out. I'm going to write it to 50 billion. All right, cool. Whether I agree or disagree with your plan, I'm in. The other thing that Dr. Cool said is it's okay to be patient. There are a million opportunities a day in crypto. You don't have to just choose to put money at work, to deploy your capital if it's not right. If you're looking at the charts and it's not right, it's not right. It's okay. You'll find it. You'll find another spot. Halama says, I think I've realized most of my mistakes in trading. Man, that is, again, if you're even just thinking back to video 1, where they're talking about logging your trades and writing down what did you learn from the trade, you're already better than 99.95% of crypto Twitter, because people don't even look back and say they made a mistake. They say, oh, this person scammed, this person rugged, which, by the way, happens a lot, but they don't look back and take that accountability to say, man, I probably should have taken some profits earlier. The next time that I get into a play, I'm going to take profits earlier. That's it. My Telegram, it's the Soka Signals Telegram, and then there's the Banana Zone where we kind of just hang out. It's in my bio. I would bring it to you, but every time I open Telegram, it drops all the frames. It's at Soka Signals. It's something like this. Soka Signals. My actual Telegram is just at Soka_data. I try to get to all the messages, but I'm a little bit behind. But that's where we all kind of hang out. And then the Banana Zone, I don't remember what the actual, it might be at the Banana Zone, but that's like where you go. And then you'll see like there's a lot of trading talk there. There's a lot of meme coin talk, and there's a lot of good stuff going on. Final point, and then we'll get right back to the video. I was on a project, a big project. I'm not gonna say which one, but there was a few people who are awesome in the space, actually good, really genuine people. And it ran up big. And I was taking some profits on the way up, and they were saying, you're crazy. It's going to go up bigger. It's going to go to billions. And I thought maybe it could, right? It totally could have gone to billions, but I was just taking some profits, and I was going to be able to go down. If it lost some of the support levels that I was looking at, I'd be able to buy at lower entries. And I round tripped a good bag though, because I was talking to people who all were saying, they were adamant, like, this is it. This is going higher. We're going here. We're going here. And I don't blame them for that in any capacity, because that's on, of course, me to kind of understand those trades. However, the thing that I did, which I was fairly happy with, is when the assets started pumping again, I started to follow my plan and take those profits. And many of the people who were talking with me, they round tripped again. So my plan was, I'm not round tripping this asset again. If we get a pump on it, I'm going to scale out. I was able to do that. I did not sell the Pico top. I sold along the way. And so when I sold at 6 million and at 8 million, at 12 million, when it ran up to 100 million, trust me, I was kicking myself. But then I was pretty happy when it went all the way back down to 0 that I was able to scale out. And some people who said, hey, I'm going to take profits next time, and they didn't, they were not super happy.
Only that it makes it so easy to
follow your rules,
distance levels, but it also gives you trend direction. That's something we'll cover more in a future video. There's many different MAs and EMAs which you can use when it comes to your trading, but the ones that I've found most useful and successful in the past is the 21 EMA or MA, the 50 EMA or MA, and the 200 EMA or MA. We'll delve deeper into how to use them in combination in the future strategies video, but for the time being, let's just cover some of the basics. If you have a look at the slide over here, the 21 and 50 MA and EMA is going to be your fast moving averages, and the 200 MA and EMA is going to be your slow moving averages. So when you look at the chart on the slide over here, you'll see that the blue line is moving much quicker than the red, and the red is moving quicker than what the white one is. And this ultimately is just the sensitivity of these moving averages. The lower the moving average or exponential moving average, the quicker the movement will be in relation to price. So if price moves, the EMA or MA will track behind price very quickly. The longer term ones tend to move a lot slower.
That makes sense, because if it's a longer term one, it's going to be calculating price action that happened a long time ago. So if there's a big spike in price, it won't register in the 200 EMA, where it will register in the smaller lower term your EMAs.
really down to personal preference. Simply put, the exponential moving averages have a much higher sensitivity towards recent price action. And this just goes down to the formula of how they calculate it. Whereas the MA is a little bit slower moving and therefore gives less signals. So it's down to personal preference. You'll have to work out strategies over time and see which ones work best for you. For this example, I'm going to show you the 200 exponential moving average on the daily time frame for Bitcoin using the logarithmic chart. Now, I've used the logarithmic chart just so that you can see the history.
Shout out to Halima, says you got to have the guts too. Absolutely. And Dubsky says, always trust your intuition. Definitely. You got to have a combination. And if you do something over and over and over again, you do develop that intuition.
Bitcoin's previous cycles.
It's pretty powerful.
How beautifully this can work. And very simply put, what you want to see is you want to see price action, number one, above the moving average, meaning the moving average is going to be a support level. And number two, you want to see that EMA angled towards the upside. That means that you have your trend confirmation that the trend is moving in an upward direction, and therefore support should be below, and you pretty much can hold that asset as long as it holds that posturing. So when you look at price over here, here it is, price recaptures the EMA is angled upwards, and there it goes. Price action seems to be holding it as support. You have wicks over here. We've already covered this. This is why the body closes of the candle are so important. Wicks are buying opportunities when they go back up. You see, as long as it's not closing below, you hold into this move and you have trend continuation. It continues, and here is your first close, which was pretty much the entire bull run for 2017. You get your first close underneath that exponential moving average, and it pulls back up into that zone, and now you start to see the exponential moving average rolling over, meaning that it's going to act as resistance, and there, what do you know, acts as resistance, takes you out of your position and holds you out for the entire bear market until such time as you get your first candle close above and the exponential moving average is angled back upwards and it holds you back in, gets you out just before the COVID dip over here, reclaims, holds you in for the next entire bull run, and here you get a little bit of chop and then holds you out for pretty much the entire bear market. So a very, very easy to use strategy. And
I cannot wait to get into these, man. Once we start setting up some of these tools for ourselves, and we'll be able to share kind of thoughts and things like that, this is going to be very powerful stuff. I see Dr. Cool says, man, I made a ton of mistakes, but no one put a gun to my head. I was the one who did them. Absolutely true. You got to take that accountability. My decision, but I learned from it. And that is how you become successful. If you think about it, if you point fingers at everyone else and say, oh, they did this, they did that, that's why I lost money, then you're never going to improve and make more money. I guarantee you, if you take your licks, you get knocked around a little bit, you get roughed up a little bit in these streets, but you take the approach Dr. Cool is saying here, like, you're going to make way more money, and you're not going to need to get as lucky. You know what I mean? Like, you have to get lucky if you're just clicking buttons. I'm going to sell because here we go. Or you have to have great intuition, you know, like Dubsy was saying, which is possible, right? Dr. Cool says, I used to be very emotional, but learned and became colder to the point I missed some great trades with higher risk and not sorry about it. You know, part of that for me, Dr. Cool, when I became a little bit colder to trading was when I realized that, like, if you miss a trade, there's another trade out there. It's like, you don't get mad. Okay, you do kind of get mad. If you miss the bus, you get mad for a little bit, but when you realize there's another bus coming, it's not like you missed the opportunity of a lifetime. You know what I mean?
super, super powerful.
Mr. Boss, you know how many screenshots I took of Bishi when I ran it from like 8K to 150K and then back down to 0K? Yeah, that's that's what I did.
Get into deep details on how to use this in combination with other indicators in future videos. Let's have a look at this chart over here. We're now looking at the 21 moving average on the weekly time frame. It's another one that's worked very, very well in the past. And the first thing that you should notice over here is the circled area. Now, if you go back in this previous part of the cycle, this is when Bitcoin pushed up towards about $48,000. And whilst most of the market were jumping into longs, thinking that that was a dip opportunity within a greater bull market, I knew that this was not, and I publicly sold Bitcoin aggressively on YouTube. There's most likely going to be a very...
Oh my gosh, look how different he looks. Kyle, This is what happens when you sell Bitcoin, Kyle. I know he was right, but I'm just saying. I'm just giving him a hard time.
Big move that's coming in the weeks to come. Us being in a downtrend, I personally would say the most likely outcome would be that we tag 23 first. I find it interesting that the majority of the
He's got the receipts, guys.
Are
That's a professional.
Bullish. It was the first time that I actually came onto YouTube, and this is one of the reasons I was able to identify this, right? Because what did I just tell you? You need to look at the direction of the moving average. The moving average is angled which way? Down. That means that the trend is down, and despite having a close above that, I knew the probability is high. It's probably going to be a fake or false move, and that's exactly what happened. Price then came down, using that as resistance, held me out for most of this move. Price then came into this zone again, closed one candle above barely, but which way is it angled? It's still angled towards the downside, and therefore I was not in the market for this major crash towards the downside. And here was your first candle where it reclaimed, holding above. The MA starts to angle towards the upside, showing that the trend is potentially shifting. Price then moves. This is your USDC collapse. The candle wicks directly into that 21 moving average on the weekly time frame, acting as major support and springboards price off of that level. And then here's your next touch point. We'll see what happens over here. Now you understand the difference between the moving averages and exponential moving averages, the fast moving ones and the slow moving ones, and how to use them in line with the direction that they're pointing. So in the next video, we're going.
All right, that was a lot. That was good. I was trying to get, if you guys saw a screen pop up, I was trying to get the actual chat be able to show up here, but I don't know if I could do that right now on the fly. That's asking a lot. Asking a lot. Take profit before taking screenshots. So you know what's funny, Dubsky? When you talk about intuition, that's my signal. When I start taking screenshots of stuff and sending it to people, I know that it's time
for
to take
many
some
new
profit.
traders. The first thing you may have seen for support and resistance is going to be diagonal trend lines. So that's what we're going to cover in this lesson. I'm going to show you some high probability ways of drawing them, and then some lower probability ways and ways that I recommend you don't focus on too much when it comes to trading. So if you have a look at the slide over here, you can see, very simply put, diagonal supporting trend line. It gauges the overall direction of the trend. It falls underneath the price action and in line with that trend. So you can see higher highs and higher lows.
I was trying to fit the chat in, so you guys saw this ugly thing. I can't fit it in unless I make the content smaller. I'll try and figure something out for next time because you guys have been awesome, and I want your chat to be preserved on the blockchain forever.
And ultimately, you want to get as many touch points as possible. It won't always fit perfect. Sometimes it might come slightly through, but the point is to find the line of best fit. So there it is, price holds until such time as it breaks. You get a bearish retest over there and the trend begins to change. Resistance is the same thing. Price is moving in a downward direction, lower lows and lower highs, and you ultimately want to connect all of those lower highs. So here in the supporting one, you're connecting the higher lows. In the resistance one, you're connecting the lower highs. Now let's take a look at an actual price chart so that you can see the way that it works in real life. This is a snippet from previous Bitcoin price action trading over here, and you can see I've connected from wick to wick to wick, and then eventually the body breaks through. So this is something a little bit different to what you may have seen in the previous ones. When it comes to diagonal support or resistance trend lines, I tend to be a little bit more lenient in the sense that instead of connecting bodies to bodies, I usually will connect wick to wick. Let's have a look at this chart. And
I really feel like I needed to be taking notes on this, because this is good stuff. Okay, diagonal, wick to wick is okay. Horizontal, body to body matters more. 25, 50, 200, MA, and EMA. Got it. Okay, we're good.
And I'm going to show you how to put in the diagonal resistance. So you can see over here, the diagonal line goes above price action. Remember, this is very important. You're going to see why in just a moment. But price action is moving in a down trending fashion, and therefore you want to put the line above. You'll also notice that in the previous lessons, I mentioned that a body close on a candle is more important than marking out from wick to wick. But when it comes to diagonal lines, I tend to give a little bit more leniency in that I would connect wick to wick to wick. I'm looking for the line of best fit, and most of the time with diagonal trend lines, it's going to be the wicks that fit best. Remember, the second one is where you can take the actual trade. So price moves into here, you get the rejection and a strong move towards the downside. And then the more times it touches that particular trend line, the higher probability is that you're eventually going to get a break of that. And that signifies a shift in momentum. It's not a full-on reversal, because price then goes on to move sideways for quite some time before only later moving into an uptrend. So do keep that in mind. Here's an example of a low probability resistance trend line. And the reason it's low probability is because the trend is towards the upside, and therefore you don't want to put an up sloping resistance line. And the reason that you don't want to do this is the following. If you have a look over here, yes, price does move up and you can see the reaction. It comes down. Price then moves up again. It rejects and it comes down. But momentum is on the bull side, in that you can see the momentum is moving.
Yeah, this is where when you're making those higher lows, that's where this gets dangerous. I have seen people do this where they say, oh, here's the resistance line. And the resistance line is like, if you just track the resistance line, you're going to get like a 5x. And I'm like, well, okay, that's, even if that is the resistance line, aren't I printing money? So if you're getting those higher highs and higher lows, when you hear people talk about that, that is what firmly rejects this idea of a upward sloping resistance line. Like, you'll take this line. Even if someone comes on and says, oh, technically there's a resistance here. Okay, perfect. Well, I'm going to make a lot of money on this resistance line because, the slope of it, I know we're all, we all know geometry, y equals mx plus b. That's the one that I did. There's that point slope formula too that no one ever used. I don't know why they even told us about it. But that is a very positive M.
Moving onwards and upwards towards the upside. So although each time it touches over here, there is a rejection. If you take your cursor across, price is moving higher. So where would you put your stop loss? If you're trying to short something like this, then it's going higher and higher each time, stopping you out. This one elicited a bit of a bigger move, but eventually it just keeps on tracking up. And as a trader, you want to trade in line with the trend. So if you're using this as a resistance trend line, it may have worked for a little bit over here, but later on you can see you would have been completely wrecked, because eventually price pushes through this level and starts to distribute and then ultimately goes a little bit lower. All right, so let's go on to the support. If you have a look over here at diagonal support, this is probably what you guys are most familiar with. You can see you have a very, very simple trend line that's put in place.
No, Kyle. We are in the trenches. We are most familiar with the chart that someone draws on their phone. I'm going to find it. I'm going to put it up
here. The wick comes through. That's okay. It's the line of best fit. Here you have a wick, another touch point with a close, a wick, a wick. You have a close that comes into that level. This wick comes through. Ultimately, body closes, and it continues to hold the trend onwards and upwards. So again, just remember, this is a supporting trend line because it's moving in an upward direction, right? So you want to put the trend line underneath the price action as it moves up. Here's an example of what some people may do. And again, it's a lower probability play where price is moving towards the downside. And then they go and put a trend line underneath the price action, which is clearly in a downtrend.
Okay. I finally found one here. Hold on. Let me see if I can pull it in here. Look at this. This is the kind of stuff that I don't know who this is. Don't worry. I don't know who this person is. I'm not giving him a hard time. But this is the kind of charts that I see when people are saying, I'm doing some TA. I'm looking at stuff going on X, right? This is the chart. Hey, Kyle, can you tell us what this chart looks like? It looks like they're, I don't know if this is the 200 EMA, the 2000 EMA. I don't know what this is, but I don't think that this chart where it just goes parabolic makes a whole lot of sense. That's just me. I don't know, but that's why we're learning. Maybe this is it. Maybe this guy's a god. Who is this? Memecoin Sniper. Maybe he's a god. Maybe I should follow him. Look at this. I don't know what chart. It's going backwards. You guys, this thing is going backwards in time. The chart is so straight up. It's like infinite. Yeah, that wishful thinking. This is definitely something. Poor guy. And the thing that sucks, I'm giving this guy a little bit of a hard time, but like the thing that sucks is that this person is going to round trip whatever happens, and they're going to get caught holding the bag because someone told him that this is going up and to become a community member. That boat kid, I don't know. Oh no,
game plan,
it's been
because
playing
if you look,
Hold on, we gotta go back
a wick moves up. Here's an example of what some people may do, and again, it's a lower probability play.
Yeah, massively bullish chart, Tubsky.
Where price is moving towards the downside, and then they go and put a trend line underneath the price action, which is clearly in a downtrend. This will elicit a low probability game plan, because if you look over here, here's your second touch point. That's the earliest point that you can take a trade. And price, yes, it does elicit a bit of a bounce, but it immediately comes back down. It would have stopped you out over there because it's lower than the previous low. Creates a little bounce, and again, comes into this zone. Yes, it elicits a big move off of there, but again, it's lower than the previous lows. You want to trade in line with the trend, and ultimately, eventually, you can see it falls through, taking out.
Yeah, so that was the idea, right? It's getting lower lows, which is not good, and lower highs. That's always that's like, we're looking at pretty basic charts, which I get, and I don't want anyone to think, and I don't think Kyle's insinuating this at all, that like if a chart looks like something, then it's like full port, all in, 100%. Again, we're thinking in probabilities. Probabilistically speaking, if a chart is making lower lows and lower highs, the trend is down, and we're probably going to be able to make money shorting it. And then on the reverse of that, probabilistically, if the chart is going up and we're making higher highs and higher lows, we can make a little bit of money. But it's like never 100%. If it was 100%, then AI would just be doing this, and there'd be zero alpha for us to soak up. And that kind of happens already. The AI does it, but the AI is not, again, their strike rate's not 100%. Their strike rate is much smaller than that as well. Dr. Cool says that guy needs to offload his bags. Yes, I would say that the poor guy is stuck
those positions
holding the bag.
So now you guys understand all the different types of support and resistance lines that we look at, the horizontals, the moving averages, the EMAs, and the diagonals. You understand the order of probability, which ones elicit the biggest and strongest moves. In the next video, I'll show you how you can take the probabilities one step further by looking at the angle at which price is coming into that level of support or resistance. Depending on the angle, you can...
Oh, dang. Okay. We're going to be taking out our protractors, boys and girls. Let's go. We're going to be getting the angle. Speaking my language. All right, next video. Here we go. I think we have about 7 minutes,
now
and then we got our quiz.
Understand how to identify support and resistance levels. I'm going...
All right, you guys, this quiz is going to be tough. So we're going to have to cook a little bit. And I've been like trying to resize some of these some of these videos and things like that. So I might
show you how to take high probability trades by focusing on the angle at which price comes into a key level of support or resistance. The angle at which price comes into a key level of support or resistance will affect the magnitude or the size of the reaction coming off of that key level of support or resistance. Think about throwing a bouncing ball from above. The first bounce into the ground will elicit the biggest move, and then each bounce thereafter will diminish in size. The same is true when analyzing the angle at which price comes into support or resistance level, as well as the magnitude of how many times price has hit that particular
Not to say it one more time, guys. Hey, maybe we need to do a house call. I got to call Kyle. We'll get him on right now. Kyle, what angle is this? What is this angle? Maybe if you're throwing a ball on the planet, like a planet with very low gravity, it could maybe do this. I don't know what planet that would be. Maybe a comet. Not even a planet. I don't know.
When price bounce thereafter will diminish in size. The same is true when analyzing the angle at which price comes into support or resistance level, as well as the magnitude of how many times price has hit that particular level.
Love the tennis illustration, says Dubsky. Yeah, the production quality on these videos is insane, by the way. I've been wanting to point it out, but yeah, 90-degree angle straight up, priest. That's
at an angle of 45 degrees or higher, it will elicit a major move, a high probability of the time.
Yeah, maybe on planet Pluto, that's what it is. So, Kyle, if it's greater than 45 degrees, okay, that's cool. What if it's 837 degrees?
If you have a look at the charts over here, you can see price action breaking through this moving average. Now, in this example, we have a moving average. It doesn't matter whether it's a horizontal or diagonal or a moving average. The point is you're using something to give you an edge and identify that key level of support and resistance. So in this instance, price pushes all the way through, has a little bit of a back test, a bounce, and now we can start to draw the angle.
Whole thing, he's actually drawing straight up the angles on this thing. Negative 62 degrees. Kyle, my man.
As price starts to approach down, using the protractor tool on TradingView, we can see it is a 62-degree angle. So that checks what we just said. It's bigger than a 45-degree angle.
Speaking of production quality, look at this. They're going back in time. They've got like the old time 8-bit camera.
Meaning it should elicit a major move. Not only that, but it's also coming into that support level for its very first test, which also adds additional confidence that this first bounce should be a big one. And as price comes down, you can see the reaction off that key moving average. It leads into a massive move of 57.65%. So you can see,
hey, not gonna lie though,
that key moving average.
This is kind of what the boat kid guy who charted did, right? It kind of went like this, and then it kind of went straight up. Kind of look, guys of God, I'm telling you.
It leads into a massive move of 57.65%. So you can see that using this in combination with everything else you've learned in trading can give you a high probability trade setup. So this is where the trade opportunity comes into place. When you understand this, you'll understand how to set up your trades and look for big moves in the opposite direction. Here's another example where price broke through a key moving average, which should have held as support. And we can set the angle in place over here. It's a 45-degree angle. Price is moving back towards that moving average to back test it for the very first time as resistance. And ultimately, you can see there's the reaction, big reaction towards the downside. It leads to a 63.5% move in the opposite direction, which would result in a beautiful swing trade opportunity. If you have a look at the following example over here with horizontal levels, we'll look at both the resistance and the support. You can see price over here, again, more than a 45-degree angle, moves into this resistance zone over here, leads to a big reaction in the opposite direction. Now, it doesn't always need to lead to a complete reversal in the trend. In this instance, it creates a higher low. Price then comes up to create an equal high, rejecting off that level. The angle is still around 45 degrees, but because it's coming in for its second test, you can see the probability of a big reaction slowly begins to diminish, and then you get a smaller reaction. So price then sets in its second higher low, comes into that zone again, and an even smaller reaction. At this point, the trend is weakening, and you expect price at some point will probably start to push through, which is exactly what happens. So you need to consider how many times prices come into that level with the angle being 45 degrees or more, because although in this instance,
you guys, I'm not even trolling on this one. This is actually like a genuine question. I know this is not like supersized, but like the angle, can't I just adjust the chart and the angle will change? No, like, can't I do that? Like, I mean, I'm trying to understand for like for our own learning, right? Dr. Cool, maybe you know, like, can't I just adjust some of these things? This is just my window size. You know, that's not changing anything inherent in the chart. But look, there's a very steep angle now. There's a very flat angle now. Like, do you just keep it consistent and then you can compare it to other charts? Is there like a standardized screen size that you want to use? A resolution that you want to use that you know like what it looks like? Like this looks like a pretty good angle right here. We should be bouncing up. I want trust me, this is Ponky. I love Ponky. I want to see that big bounce up. Make it as spiky as we can. So I got to look into that one. I'm not sure what the answer is there.
Degrees, the third touch would not be big enough to, then you get a smaller reaction. So price then sets in its
Cool says I forgot to add the line. So if I add the line, the line will shift in the same magnitude you're saying. So like if I add the line will either flatten out or get steeper. Is that what you're saying?
Second higher low comes into that zone again, and an even smaller reaction. At this point, the trend is weakening, and you expect price at some point will probably start to push through, which is exactly what happens. So you need to consider how many times prices come into that level with the angle being 45 degrees or more, because although in this instance the angle is still 45 degrees, the third touch would not be big enough to actually take a trade off. Remember, when it comes to your trading, you always want to reduce the risk as much as possible and increase the probability of success by as much as possible. So not all support and resistance levels are built the same. As a general rule of thumb, some are stronger than others. And this would be the order of significance that I would look at support and resistance levels. Number one would be horizontal level.
Okay. I know we've been messing around a lot. We are locking in right here, guys. This is, he's giving us a summary. He's giving us an order of operations. Let's see it. Number one, horizontal levels.
Key horizontal levels are usually the
Taking
strongest.
Notes.
Next would be your slow moving averages. Typically, as a rule of thumb, your slow moving average is going to be your 200 moving average or higher, specifically set on a high time frame like a daily or a weekly chart.
Okay, this makes sense. And I'm like kind of a story kind of guy. Like, I want to be able to know a story so that I can remember this forever. This makes sense. Horizontal lines are like kind of longer time frames, and slow moving averages, it makes sense. If you have been doing something consistently over and over and over for 200 days, that matters a lot more than if you go to the gym for 200 days in a row, that matters a lot more than if you went to the gym 2 days in a row. You know what I mean?
And lastly would be diagonals. The diagonals would be used on a low.
Diagonals. No, I'm all in on the angle, dude. I'm going to be the angle trader. That's what I'm going to do. That's it.
Time frame, and those hold the lowest significance because they break a high probability of the time, and oftentimes they counter to the trend. Finally, always remember that when price approaches a key level of support or resistance, whilst moving in at a 45-degree angle or higher, and more specifically, it's coming in for its very first touch point, that is a high probability trade which will elicit the greatest move. And your key levels are horizontal levels, high time frame moving averages, and diagonal levels of support or resistance. If we have a look at this example over here with the horizontal support, again, you can see more than a 45-degree angle. It's a strong movement towards the downside, coming in for its very first test of that support level, which means high probability trade opportunity. You'd be looking to place your stop below that support level and playing the reaction in the opposite direction. So this would be a long trade, and price goes up, sets in a lower high, comes down. In this instance, the second time did result in a bigger move up, and price then comes down. So you can see something interesting happening over here with a potential break of structure. The next bounce leads to an even smaller move. And for those of you out there who might be a little bit more advanced, you can probably already see it. This is a head and shoulders formation with a supporting trend line.
I was about to say the head and shoulders
being your neckline, which ultimately leads to a further breakdown at a later stage. Now, in the very next lesson, we're going to dive into detail, covering both candlesticks and chart patterns. So you'll learn a whole lot more about how to identify these chart patterns, which just takes your trading to that whole next level.
Production quality right there. Hey Kyle, I got a question. What does the chart look like when Kanye West launches a coin and makes a tweet and does some racism and it goes to 3 billion and then just goes straight down? What's that pattern? What's that pattern?
Once you have this understanding of how to utilize support and resistance, how to understand the angles, and using the chart patterns in combination, you'll have a super powerful strategy to succeed.
Call that chart pattern the Kanye West chart pattern. You call that the Hayden Davis patented. All right, boys and girls, this is it. This is going to be a more difficult one. I think the last one was pretty easy but we rolled it. I feel like we need music. Hold on, we need like epic music in the background. Although anytime I try to play music on here, YouTube freaks out and they DMCA the whole thing. So I'm not going to do that. I do want some epic music if I could. Just like instrumental music for us taking this thing. Do you think we can get away with it? You guys think this is going to be copyrighted? Hold on. I'm just going to type in. Let's see. Let's see if anything comes up good. This says free music. Okay. Okay. Who says no? I want free music. Okay. I don't know what this is. Supposed to be a little bit epic, though. That epic? Here we go. When we get banned, that's okay. It says non-copyrighted music. This is titled A Good Day to Die. Hopefully not. Hopefully we're going to pass this thing. Here we go. All right. What will affect the magnitude or the size of the reaction coming off of a key level of support or resistance? You guys, we know exactly what that is because I already told you. I'm all in. I only care about the angles. That's what I'm gonna trade on. And I believe that it is angles. I don't even need help on this one. Time of day. Come on, guys. Give us something hard. Wait, volume? Priest, is it actually volume? Oh my god, am I wrong? Oh my, I'm blinded by my love for the angles. Thanks, cool. I think, trust me, I'm always worried about the copyright. I think that we're gonna be okay here, but we'll see. We'll see. I think Dubsky, I think it's the angles. I think it, Priest. I see where your head's at, Priest. I see where your head's at, but I think the angle of the trade is gonna tell us that magnitude. Let's do it. Boom, we did it. Look at that. Hey, and by the way, this is one of the biggest things that I believe in, and that's why I'm doing this together. I don't know if you guys have ever heard of the miracle of aggregation. The miracle of aggregation means that if you have 100 people sitting in a room together, then the collective intelligence of that 100-person room is greater than any single individual. So you could have like a neurosurgeon, like the smartest nuclear physicist, and somehow, some way, if you put him in one room by himself and you put 100 people together, the aggregated knowledge of their understanding of quantum physics or nuclear physics, whatever I said, is actually better than that guy. There we go. So that's us together right now. Priest, thank you for being part of the team. We did it. All right, here we go. When price approaches a key level at an angle of 45 degrees or higher, what will it elicit? A major move, a minor move, or no move at all? I believe, again, I've self-proclaimed angle trader. I believe this is a major move, right? When it goes, the principle of aggression, says Dubsky. Aggregation, but aggression, I like that too. When a price approaches a key level at a 45-degree angle, that's a major move, dude. We know what that is. We know. They can't trick us. They can't trick us. What is used to identify a key level of support and resistance? Horizontal levels, diagonal levels, and a volume indicator. Moving averages, horizontal levels, and an RSI. Moving averages, horizontal, and diag levels. I think that obviously you can use an RSI and a volume indicator for different things, but we did not discuss either of those in the section that we just did. So I'm going to go ahead and put, see, that's where we're at, right? I heard moving averages, horizontal levels, and diag levels. I did not hear anything about volume indicators or RSI in the course that we just took. This music, it's no wonder it's not copyrighted. Not as epic as I maybe thought it would be. But who knows? We're still here. We're grinding. We're keeping our perfect. Are we going C, guys? That's right, right? Going C? Here we go. Woo! Did it before confirmation, so that always feels good here. Which holds the lowest levels of significance? Oh my god, dude. We said lock in 2. Okay, horizontal levels was the highest level of significance. Moving averages was next, right? It was horizontal, long-term moving averages, and diagonals, no? Is this right? Diagonals? They're the lowest level. I gotta get the screen fitted. It drives me insane that it's like this little teeny tiny screen and there's all this dead space. I guess that I could now add in the chat. Hold on. Hold on. Here it is. Here we go. Let's cheat together, guys. Okay. Perfect. Oh, there we go. Now we can put it in here. Diagonals. Bang. We did it. Diagonals hold the lowest level of significance. There we go. Now everyone could see our cheating. We're working together. We're cheating. Our teacher's going to... Oh my god. And then they give a long question like this. I have nowhere to put the chat. You guys, chat's going away for a second while we read this. What is a high probability trade which will elicit the greatest move? A lot of reading, boys and girls. Okay. A, price approaching a key level of support or resistance whilst moving at a 45-degree angle or higher, and more specifically, it's coming in for its very first touch point. Price hitting a diagonal level. Probably not that, right? Diagonal levels, they don't matter as much, so we're probably not putting that. He says high probability. Diagonal levels matter, but not high probability. C, price is approaching a key level of support or resistance while moving at a 45-degree angle or higher. This is going to be tough because I'm the angle trader. I got to think of a better name. But they both have 45-degree angles, regardless of whether it's the first touch point. I thought the first touch point has a higher bounce. Is that true? Speak to me, people. Are we going A or are we going C? I think B is out. We don't even need to talk about B. Are we going A or are we going C? If you remember, A, it's coming for its first touch, and C is coming for whatever. It doesn't matter what its touch is. The first touch is the hardest bounce, no? Am I right on that? Let's see. Dubsky said most probably A, but I think that that was for the previous one. I'm kind of with you, Priest. I think that that's right. We're killing these questions, by the way. What are we? 5 here and 8 there, so it's 13. 13 for 13, if we get this right. All right, here we go. Did we do it? Moment of truth, boys and girls. A. Correct. A high probability trade, which will elicit the greatest move, is when price approaches a key level of support or resistance whilst moving in at a 45-degree angle higher, and more specifically, it's coming in for its very first touch point. Again, don't worry, Priest. You killed it. Shout out to you, Gold Star. This is where, like, the, they should have added in, oh, and now Kanye West tweets about it and has promised to give money to some, like, racist thing. Oh, we did it. 100%. That's it. All right, guys. Our next lesson. Okay, hold on. Let me mute the non-copyrighted sound. I can go away. Done. All right, you guys. Hey, I'm gonna let this run a little bit in the background while I talk. I'll bring up the chat here as well. Boom. Okay, so our next lesson is gonna be candlesticks. I'm not sure when it's gonna be. It might be tomorrow. I've got to look at my schedule and see what I got, but it might be about the same time tomorrow because this has been a blast. So I really appreciate you guys jumping in and hanging out for the space and obviously learning together. Dr. Cool, you added a lot of value, with your ideas. And I think that's really helpful having someone who like has been there, done that for all of us, and appreciate Priest, Dubsky. I appreciate Mr. Boss as always. It makes this way more fun. We had Genie in here. Hope I'm not missing anyone. And tomorrow, I believe I am doing the. Oh yeah, we'll talk about the candlestick, 100%. But I can't do it right now. Unfortunately, I got to jump on a call. But we'll do it tomorrow. I'll schedule it. We'll get it scheduled out, and I'll get it posted a little bit later today after my call. Priest, man, thanks for staying up. 12 a.m. That's a true friend there, man. Not just a degen, true friend. So shout out to you. So we'll get this thing out there. I can't wait to see this about candlesticks either. These lessons have been great for me. Mambo giveaway will be on Friday, and I may just do it live on the stream. Oh, I actually think I'm supposed to host a space for them to do it. Okay, I'll host the space, but we know we have a suspicion who might be winning it. We might need to split the prize a little bit. So I hope you guys are cool with that. But that's okay. We'll do our thing. Again, it's going to be completely random, as you're aware. So thank you again for hanging out. I really appreciate it. We all hopefully learned something. I learned about angles, and 100%. I'm going to be checking out those angles. That's all I want. I just want to see the angle of the Kanye chart, and I can tell you exactly where it's going based on that angle. Dr. Cool, I'll be looking for your message in Telegram. Thanks so much. Thank you, guys. I'm going to rug it here. But it's always good. Much love. Peace out, you guys.